Further afield, cash-strapped Sri Lanka announced on Tuesday it would sell long-term visas to attract a desperately needed foreign currency after the island nation ran out of dollars to pay even for food and fuel. For more details, next in our international business news.
Foreigners who deposit a minimum of $100,000 locally will be granted permission to live and work in Sri Lanka for 10 years under the Golden Paradise Visa program. Under the program, the money payable will need to be deposited in a local bank account for the duration of the visa. The government also approved the granting of 5-year visas to any foreigner spending a minimum of $75,000 to buy an apartment on the island. Trading at the Colombo Stock Exchange was halted 3 times Tuesday as prices plunged, with the blue chip S&P index closing down 9.75%. That came on top of a near 13% drop on Monday, the first day of trading since a 2-week break during which the government hiked interest rates and defaulted on its $51 billion foreign debt. Equities have shed 47% of their value since January, with the local currency falling by about 40% against the greenback in the past month. Fuel prices have almost doubled since December, and the government on Tuesday announced an 81% increase in the price of cooking gas. Meanwhile, Tesla shares have fallen after investors concerned that boss Elon Musk may have to sell shares in the electric car maker to help pay for the takeover of Twitter. Tesla had more than $125 billion wiped off its market value on Tuesday. The slump in Tesla's values may pose problems for our $12.5 billion loan Mr. Musk had secured against his stake in the company. Tesla's share price has taken a hammering, with some investors wondering whether Mr. Musk's Twitter purchase is bad for Tesla. Shares dropped 12.2% from just over $1 trillion to $906 billion. Tesla shareholders are also concerned the deal could mean he's selling off a stake in a car farm. As part of the deal, he has stamped up a $21 billion in equity himself. Finally, most Asian stocks indices fell on Wednesday as growing fears of a global economy drove investors to dump riskier assets in favor of safe havens such as US dollars and government bonds. Financial markets are grappling with multiple risks, including the prospect for aggressive US interest rate hikes, a sharp slowdown in China, surging inflation, and the war in Ukraine. European markets looked set to follow Asia lower. In early trade, the pan-region Euro Stoxx 50 features slipped 0.38% to 0.12%. News that Russia had briefly cut gas supplies to Poland deepened worries, sending the MSCI World Equity Index slumping to a 13-month low. Terry Njenga, Channel 1 Business.